Hello. Okay, sorry we're starting later. Get taller. I had the meeting I had to go to. It's for the accreditation of the school, and they do it. I think this is they do it every 10 years, and this is a 6 year or something. So just dumb luck that bad luck that we had. It came during the same time as our class. Anyway, so today what we're going to do is pick up on the chapter 6 handout, and we're going to go into the multi-step income statement, which we talked a little bit about last class, but we'll go ahead and finish that up today. And then next class we'll have the practice exam. Okay, so what I'm going to do here is share my screen. Okay. So let's go back. So this is what we're doing, the multi-step income statement. So we have sales, cost of goods sold, operating, other taxes. And so we remember it by SCOOT, SCOOT. And so that's what we're going to do here. So we're going to do page 12. Now I put it on two different screens here so that I can do it over on this side, taking the information from over here. So this will just be our SCOOT thing. I think I might do this in capitals just so it's easier to see. So it's going to be SCOOT. It's hard to do. I'll probably have to redo these, but we'll see. Okay, so remember by SCOOT. And the first thing we're going to have is sales revenue. So this is our money coming in, basically. And these are not debits and credits. It's just it's kind of the way it works out. I don't know. 2,500. And you can tell right now I'm going to move this down. Okay, now, so here's our sales. So we just did that one. I'll mark these up. Oops. I gotta remember to mark them up on the same one. So there's our sales revenue. Now we have these sales discounts and returns. So this is stuff that is that been returned to us. So it's going to reduce our sales. We sold the stuff, but it came back. So yeah, so that's what that is. So sales returns and so that's going to be a minus 50. And so this is what we call our net sales or revenues. 2,500 minus 50 is what, 2,400? Okay, so it would be 2,450. 2,500 minus 50. Okay. So these are really the sales that we had. Net sales or net revenue. Color coordinate delay, yes. Okay, then we go to C, which is our cost of goods sold. And our cost of goods sold is 1,300. And you recall, so this cost of goods sold, this is the same thing as we did before, the previous. And this will give us our gross profit. All right, so this is $2,450 minus 1,300, 1,150. Excuse me. And so you'll notice, sales minus cost of goods sold equals gross profit. That's exactly the same thing that we did up here for these. Sales minus cost of goods sold is gross profit, exactly the same thing. We're just going to do the entire income statement or multi-step income statement instead of just part of it. Okay. The next thing we have is our operating. Oops, start again. Our operating expenses. And operating expenses are basically two expenses. They're selling and administrative expenses. You come up here, operating expenses, they're selling administrative. So that's what we're gonna take them down here. So our selling expenses, let's make that blue. And our general administrative expenses. And I think I'll put these as a separate line. Okay, so this is 270. All right, 200. So this will be our total operating expenses. what is that? 470. And these are actually money going out. I think the minus is the problem. All right, so this will be our total operating expenses. And I need to move these down. Let's take them out completely. All right, and so this will give us our so 1,000. Let's see. Color coordinating is some difficult. So this will be our operating income. So it'll be 1,000. $1,050 minus 470. 680. Okay. So next thing, the second O. The revenues, expenses, and this will include gains and losses, which we'll talk about in a second here. And basically, so this is the one we're talking about here. It is interest income and gains will be pluses. Interest expense and losses will be minuses. And losses are on the sale of assets, and I'll talk about that in a second. But those are the that's the one we're looking at, though, the other. Okay, so, and I'll make those red. How about? Okay, so this, that. Let me get rid of that, be confusing. I know, I'll make it gray. How about? Okay. Now, tax expense, that's going to be the T in our scoot. So we're not going to do anything with that yet. But these, the loss on sale of asset, interest expense, interest income. You can put these in any order you want. I'm just going to do them in the order they are up here. So I'll say loss on sale of asset. Minus 60. Now this one you gotta be a little careful of for stuff in this group, because some of these are gonna be pluses, some of them are gonna be minuses. The interest expense, gonna be a minus But now this interest income, this is money that came in. So this is, for instance, if we get money on our bank account, you know, they pay us some interest. So that would be a plus. Okay, so that would be. So this would be total. Oh, I know. There we go. If I bold it though, it's gonna. I'll underline it. Okay, I'll bold it over here. So these are the total. So this is -60, -15, and +25. You can put in your calculator. I'll give you a little tip. And that is sometimes you get ones like this, and you're worried that it might not add up right in your calculator. Just start with the pluses first, and then subtract out. So I'm going to say 25 minus 60 minus 15. So this will actually be a minus. Net amount will be minus 50. Wait a minute, that's not what I should do. And this will give us our income before taxes. So this is. So 680 minus the 50. 630. Oops. And so this other revenues and expenses, I think I talked about those yeah, last class, but I'll talk about them again, obviously. So the other revenues and expenses, these are things that are what they term incidental to the business. You're not actually in business to do those things, but they are something that has occurred. So for instance, the interest income being, you know, I think I use an example of a pizza parlor, a pizza restaurant, that if they, you know, they make their money making pizzas and selling pizzas. Okay. Well, they probably have a bank account. Customers pay, they take the money and they deposit in the bank, and that bank account may earn interest. Now, they're really not in the business of earning interest, but incidental to running a pizza place is you have to have a bank account, and that bank account may earn interest. So, other revenues and expenses are those things that are what the term incidental to the business, that they are not exactly what you're in business to do. However, they did occur. It isn't like you didn't get interest on it. You did. So that's why we kind of separate those out. The main expenses are going to be the operating expenses, and those will usually be much bigger than the other revenues and expenses. But the other revenues and expenses, those are things that are, again, they're not really what you're in business to do. Excuse me. Another thing I think I mentioned before is that, for instance, you maybe have a delivery truck or car to deliver the pizzas. So you buy a new one. After a while, the old's old or whatever, you buy a new one. And you sell the old one. Now, you're not really in the business of selling cars. But incidental to the business is you have to have a delivery vehicle, and when you get a new one, you sell the old one. So you may have a gain or loss selling that car. That's not really what you're in business to do. You're not a car dealer, you sell pizza. So those are things that, again, that are incidental to the business. They're not really what you're in business for. But again, they did happen. It isn't like they didn't happen. They did happen. But they're just not what you're really in business for. So that's why we kind of separate those out as something that's different from the regular operating expenses. So these are things that, again, well, they're not, they happen, but they're not really what you're in business to do. Okay, the T of our scoot is our income tax expense. So it's taxes. Taxes always come at the very end. You'll pay taxes on this amount usually. And so they tell us that taxes are, let me move my camera so I can see what I'm putting up here. 75. And this will give us our net income. So 630 minus 75 equals 555. Okay. So this will be let's be the net income. So this is the multi-step income statement. Oops. What happened there? Hey, it's crunched my number up. Okay. And so kind of like the classified balance sheet, we kind of get those things together that are similar. And I think I told you guys this, but a lot of times when you see I think when people are analyzing companies, see how well they're doing. This will be a lot of times the operating income is actually the one that they will look at the most. This is the one that a lot of times companies will focus on, or analysts will focus on, because this other stuff, like I say, it's incidental to the business, and a lot of times you don't have too much control over it. You know, you don't have too much control over what you sell an old asset for, or what your interest income is, and expenses and all that. And your income taxes that just go by the tax code. So this is really a lot of times what people would think of as a better number in some ways than the net income. Because this is whatever they're in business to do, this is the number that is represents that. And quite honestly, that they have more control over. You know, a lot of times they don't have too much control over these other things. Whereas these, you know, they can control the, you know, what items they buy, the cost of goods sold, what they pay for things, the selling expenses, administrative expenses are under their control. So these are all things that they can control and that are part of their regular business. Whereas these down here are not really what they're business to do. Question on that? Okay. Let's go ahead and do the other one. Same one. Okay. So page 15. I don't know why I'm putting these in. I'm sure I'm going to change them. But anyway, remember the order by Scoot. Okay. All right. So coming over here, we have sales or revenue, 1280. What's up here? Oh. So these are what we sold. This is what people return to us, or the whatever business it is. So to subtract those out. So 24 of it was sent back. So this will be the, what you call the net sales. It's not nice little sales. Net sales revenue will be whatever that is. I see up here. So C, cost of goods sold. Uh, 800. I think I made that green last time. Let's stick with the color coordination. Okay, and this will give us our gross profit. Sometimes called gross margin. Oops. 456, I think. Okay, and the first, oh, and these are usually the big expenses. These are the operating expenses. And these are two of them, and that is this and that. Okay, so this is oops. There you go. Okay, minus 100. Okay. So total operating expenses would be minus 230. Nope. Wait. Change that back. Okay. And this will give us our operating income. I'm going to separate that a little more. So operating income. All right, so this is I'm having a real tough time with this arrow thing. All right. So 456 minus that equals, oops, 226. And again, this is, I'm just going to copy that rectangle thing I had up here. Oops, not too far. This thing. Probably would have been easier just to. apologize for this. Yeah, it would have been a lot quicker just to make a new one. But anyway, this is in a lot of ways, this is the best number on the income statement because it's the one that is it's mostly due to what they're actually in business to do, whatever it is. Okay. So other revenues and expenses, these are the things that are incidental to the business, where they're not really what we're in business to do, but they are, they did happen. They are part of the business, they're just incidental to it. And the gain, interest expense, and interest income are all part of it. Oops. Okay, gain on sale of equipment. Again, they're not, you know, if it's a pizza place, they're not really in the business of selling equipment, but they did sell it and they had a gain. So that would be plus 40. They had interest expense. Which is minus 4. Interest income, which was plus 20. And I move my taxes down here a ways. Here, maybe. Okay, so this will be our total other revenue. Yeah, okay. So total other revenues and expenses. Okay, so 40 minus 4 plus 20, 56 plus. And this will give us our income before taxes. And that will be, I never had so much trouble with arrows in my life. Okay, so this is 226 minus or plus 56. 282. So this is our income before taxes. This is another number sometimes people look at, interest income before taxes. And sometimes they'll do this number plus the interest expense, and that'll tell you like before interest how much money they made. But again, you know, sometimes this is a little bit it can be deceiving because, for instance, here, at 40 of GAN cell equipment, that doesn't happen all the time. So it also is kind of a, I don't know. Right, so income tax expense. 80. And that'll give us our net income. Oops. 202, I think. 282 minus 80. Yeah, I think that's it. And that's it. And so these, this multi-step income statement, it really puts together things that are more important with those things that are less important. So, for instance, especially when it comes to the expenses, operating expenses are the most important. These are less important. Not saying they didn't happen, they did happen, but they're not usually what you're in business to do. And income tax expenses, whatever the expenses at the end. And this number is like a calculated number where going to accounting and corporate taxes, we'll get to how you figure that out. But for our purposes, it'll be here. And again, companies usually don't have too much control over that. They might have some planning or something, but for the most part, usually not too much. And so that's the net income. I think that's it for the handout. Okay. Oh, I should have done this at the beginning of class. So today we finished. Oops, caps on still. And it will be entered as an assignment. Let's put it right here. Due on, let's see, today is 30th, so it'll be due on April 7th. In next class, something weird going on here. Okay. So next class, we will have the Chapter 6 practice exam. And the exam will be sent out after the class. So this is on Thursday. Okay. Okay, Nasser, you're you're the only one. Is there any questions? No. All right. All right. Well, I will. This will be posted soon, and I will talk to you guys later.